Right now, the world feels like it's on edge. Conflicts rising, uncertainty everywhere. And the markets reacting in seconds. But here's the truth most traders in the US never realize. The market doesn't destroy you during chaos. Your own decisions do. Jesse Livermore understood this better than anyone. The market is never wrong. It's the trader who reacts without control. In times like these, fear spreads fast. Traders rush in, rush out, and lose without even understanding why. But the real money? It moves to those who stay calm, who think clearly, who control themselves when everyone else is losing control. This video is for those who want to think differently, especially in moments like this. Because in trading, you're not fighting the market. You're fighting your own mind. And today, I'm going to break down 8 powerful lessons that can completely change the way you trade and the way you think under pressure. Right now, markets are moving fast. News drops, charts spike, and most traders react without thinking. But here's the truth, especially for traders in the US. You don't lose money because of the market. You lose money because you react too fast. Jesse Livermore understood this decades ago. The market doesn't defeat you, your lack of control does. Every time volatility increases, most traders do the same thing. They chase the move. They jump in late. They exit early. And then they wonder why nothing works. This is not a strategy problem. This is a reaction problem. Because when fear hits, you close too soon. When greed kicks in, you hold too long. And when you take a loss, you try to win it back instantly. That's not trading. That's emotional decision-making. Professional traders in the US don't think like this. They don't rush. They don't chase every move. They don't try to prove anything to the market. They wait because they understand something simple. Not every move is an opportunity, and not every opportunity is worth taking. Control isn't about doing more. It's about doing less. But with precision, it's about staying calm when everyone else is reacting. Because in this game, the fastest trader doesn't win. The most controlled one does. But here's where it gets even more dangerous. Even traders who learn control still lose money. Why? Because in the next lesson, you'll see how most traders enter the market at the wrong time, even when they feel confident. And this is exactly where most US traders quietly lose their capital. So stay with me, because what you're about to learn next can completely change the way you enter every trade. Most traders think if they find the right setup, they will make money. But here's the reality, especially in the US markets. Being right at the wrong time is still a loss. Jesse Livermore understood this deeply. He didn't just focus on what to trade, he mastered when to act. And that's where most traders fail. They see a breakout, and they jump in late. They see a dip, and they enter too early. They act based on excitement, not confirmation, and slowly, their capital starts bleeding. This is the silent killer. Wrong timing doesn't look like a mistake. It feels like you were almost right. But in trading, almost right still means losing money. Professional traders don't chase moves. They position themselves before the move, and they wait for confirmation. They understand that patience is more profitable than prediction. But beginners, they want action. They want instant results. They want to be right now. And that urgency destroys their account. Because the market rewards patience, not impatience. It rewards discipline, not excitement. And most importantly, it rewards timing, not just direction. But here's where it becomes even more dangerous. Even if you master timing, even if you start entering at the right place, there's still one thing that can destroy everything: your own success. In the next lesson, you'll discover how making money can actually become the reason you start losing it. And this is where most traders in the US fall apart, right after they think they've finally figured it out. Every trader in the US dreams of this moment. Their trades start working, profits begin to grow, and suddenly, everything feels easy. But this is where the real danger begins. Because in trading, losing money is not what destroys most traders. Making money does. Jesse Livermore learned this the hard way. He didn't lose because he didn't understand the market. He lost when he started believing he had mastered it. At the beginning, you are careful. You follow rules. You respect risk. But after a few wins, you feel confident. Then confident becomes overconfident, and overconfident becomes careless. You start increasing your position size. You take trades without confirmation. You ignore your own rules, not because you don't know them, but because you think you don't need them anymore. This is the ego trap. The moment you believe, "I've figured it out," that's the moment you stop thinking clearly. And the market punishes that instantly. One bad trade turns into two, then three, and suddenly everything you earned starts disappearing. Not because the market changed, but because you changed. Professional traders understand this. They don't get excited by wins. They don't increase risk emotionally. They stay consistent, no matter what the result is, because they know success in trading is not about winning more. It's about staying the same, even when you win. But most traders can't do that. They let success control them instead of controlling themselves. And that's why they give everything back to the market. But here's something even deeper. Even if you control your ego, even if you stay disciplined after winning, there is still one hidden force that quietly destroys most traders. It's not fear, it's not greed, it's something much more subtle. In the next lesson, you'll discover how overtrading slowly drains your account without you even realizing it. And this is where most US traders lose, not in one big loss, but in hundreds of small, unnecessary trades. Most traders in the US don't blow their accounts in one trade. They lose it slowly, silently, trade by trade. This is called overtrading. It doesn't feel dangerous because every trade looks small. Every loss feels manageable, but over time, it destroys everything. Jesse Livermore once understood something most traders ignore. You don't get paid for activity, you get paid for patience. But beginners do the opposite. They open charts all day. They feel like they must trade. They think more trades equals more money. So they enter again and again and again. Not because the setup is perfect, but because they don't want to miss out. This is not strategy. This is addiction. Overtrading comes from one simple emotion, the need to be in the market. But the truth is, the best traders spend most of their time doing nothing. They wait, they observe, they let the market come to them because they understand one clean trade is more powerful than 10 random ones. But most traders can't sit still. Silence makes them uncomfortable. No trade feels like a missed opportunity, and that pressure forces them into bad decisions. Small losses start stacking, confidence starts dropping, and before they realize it, their account is already damaged. Not by one big mistake, but by hundreds of unnecessary ones. This is why overtrading is so dangerous. It doesn't shock you, it slowly drains you. But here's something even more critical. Even if you stop overtrading, even if you become patient, there's still one mistake that can wipe out everything in a single moment. In the next lesson, you'll understand how poor risk management turns a normal loss into a disaster. And this is exactly where most US traders lose big, not because they were wrong, but because they didn't know how much they could afford to be wrong. Most traders in the US don't fail because they're wrong. They fail because they lose too much on one trade. This is where everything breaks. Risk management. Jesse Livermore knew this better than anyone. He didn't try to be right all the time. He made sure that when he was wrong, it didn't cost him everything. But beginners think differently. They focus on profit. They chase big wins. They ignore one simple question. If this trade goes wrong, how much will I lose? And that's where the damage begins. They increase position size. They don't use proper stop losses. They risk too much on a single idea because they believe this trade will work. But the market doesn't care about belief. One wrong move, one unexpected spike, and suddenly, a small loss turns into a big loss. A big loss turns into panic, and panic turns into destruction. Professional traders never let this happen. They think differently. Before entering any trade, they already know their exit. They accept the loss, even before they accept the profit, because they understand survival is more important than success. If you protect your capital, you always get another chance. But if you lose it all, the game is over. This is the difference between amateurs and professionals. Amateurs try to win big. Professionals try to avoid losing big. And in the long run, that's what creates consistency. But here's something even deeper. Even if you manage your risk, even if you protect your capital, there's still one hidden weakness that destroys traders from the inside. It's not visible on charts. It's not visible in numbers. It's inside your mind. In the next lesson, you'll discover how your own thoughts, your own doubts, quietly sabotage your trades. And this is where most US traders struggle the most. Not with the market, but with themselves. Most traders in the US think their biggest problem is the market. But the truth is, their biggest enemy is something they can't see, their own mind. Jesse Livermore understood this deeply. He knew that charts don't confuse you. Your thoughts do. You enter a trade with a plan, everything is clear, but the moment price starts moving, your mind starts talking. What if this goes wrong? Should I exit now? Maybe I should hold more. And slowly, and then clarity turns into confusion. This is where most traders lose control, not because the setup was bad, but because their mind changed the plan. Fear makes you exit early. Greed makes you hold too long. Doubt makes you break your own rules. And the worst part? You know what you should do, but you still don't do it. This is the real battle of trading. It's not you versus market. It's you versus you. Professional traders understand this difference. They don't trust every thought. They don't react to every feeling. They follow structure, not emotion, because they know discipline beats intelligence in trading. You don't need to be smarter. You need to be more stable. But most traders never master this. They keep searching for new strategies, new indicators, new shortcuts, while the real problem is already inside them. And until they fix that, nothing will change. But here's something even more dangerous. Even if you control your mind, even if you follow discipline, there's still one final mistake that quietly destroys consistency. It's not about entries. It's not about exits. It's about not understanding the bigger picture. In the next lesson, you'll discover why most traders fail, because they focus on small moves and completely ignore the big trend. And this is exactly where most US traders lose direction, even when they think they're doing everything right. Most traders in the US focus on one thing: the next move, next candle, next breakout, next quick profit. But this is where they go wrong, because real money in the market is never made in small moves. It's made in the big trend. Jesse Livermore didn't build his fortune by catching every move. He built it by sitting on the right one. But most traders can't do that. They enter, take a small profit, exit quickly, and then watch the market move 5 times more without them. Why? Because they are thinking small. They are focused on action, not direction. They want to win quickly instead of winning big. And this mindset keeps them stuck. Professional traders think differently. They don't just ask, where is the market going next? They ask, where is the market going overall? Because when you understand the bigger picture, you stop overtrading, you stop panicking, you stop reacting to noise, and you start holding with confidence. This is where real wealth is created, not in fast trades, but in patient decisions. But here's the final truth. Even if you understand the big picture, even if you follow the trend, there is still one last thing that separates average traders from those who truly succeed. It's not strategy. It's not psychology. It's something deeper: consistency over time. In the final lesson, you'll understand why most traders fail, not in one moment, but because they can't stay consistent. And this is the ultimate difference between those who make it and those who quit. Most traders in the US don't fail in one big moment. They fail slowly because they can't stay consistent. They learn strategy, they understand psychology, they even control risk for some time, but they don't repeat it. One day they follow rules. Next day, they break them. One week they stay disciplined. Next week they become careless. And this inconsistency destroys everything. Jesse Livermore knew this truth. It's not one great trade that makes you successful. It's doing the right things, again and again. But most traders chase something else. They chase excitement. They chase quick results. They chase that one big win. And in that chase, they lose their structure. Because consistency is boring. It means following the same rules, waiting the same way, managing risk the same way, every single time. No shortcuts, no emotional decisions, no random actions, just discipline, repeated daily. And this is where most people quit, because they don't see instant results. They think it's not working. But the truth is, consistency doesn't feel powerful in the moment, but over time, it becomes unstoppable. Professional traders understand this. They don't try to be perfect. They try to be consistent because they know if they can repeat the right process, profits will follow automatically. And this is the final lesson. Trading is not about being the smartest or the fastest. It's about being the most consistent, because in the end, you don't lose to the market. You lose to your habits. And if you can control those habits, then no matter the situation, no matter the volatility, you become the one who survives and wins. If this video hit you, if even one of these lessons made you pause and think, then you already know this isn't just about trading. This is about control, discipline, and the mindset most people never build. In the US markets, the difference between those who win and those who disappear is not strategy. It's awareness. So if you're serious about changing the way you trade, if you're done repeating the same mistakes, then don't just watch and leave. Commit, subscribe, and start training your mind like a real trader, because the next videos are not for everyone. They're for those who are ready to think differently, act differently, and finally break the cycle. And if that's you, don't wait. Hit subscribe and step into a different level of thinking. Thank you for watching.